Welcome back to Sawyer Silver Vault. If you are just casually glancing at the Bitcoin price right now, you might think the market is asleep. You might see a number around $63,000, $64,000 and assume that nothing is happening. You might think the excitement is over. But let me stop you right there. That is exactly what the big money wants you to think. What we are witnessing right now is not stillness. It is the quiet before a violent storm. A storm that could hit within the next 24 hours. Here's what most people aren't seeing. While the price appears to be stuck in a range, the underlying mechanics of the market are screaming that a major move is imminent. We are seeing a massive clash between two opposing forces. On one side, you have macroeconomic pressure that is trying to push Bitcoin lower. On the other side, you have some of the smartest, most patient money in the world accumulating at these levels like there is no tomorrow. And this tension is about to break. This morning, Bitcoin is showing resilience, hovering near the $63,600 mark, up just over 1%. But do not let this calm price action fool you. A series of seismic events have just occurred that are setting the stage for a potentially explosive short-term move. The Federal Reserve just made its first move under new leadership. Geopolitical tensions are shifting, and the institutional landscape is changing in ways that most retail traders are completely ignoring. Let's talk about the elephant in the room, the Federal Reserve. Just days ago, the Fed held its benchmark interest rate steady at 3.5 to 3.75%. But that decision to hold rates is not the real story. The real story, and this is critical, is the hawkish shift in their projections. New Chairman Kevin Warsh, in his first policy meeting, raised the committee's year-end forecast for rates to 3.8%. He is signaling that the fight against inflation is not over. He's moved away from the dovish forward guidance we were used to under Powell, and that has injected a massive dose of uncertainty into the market. When the Fed projects higher rates for longer, the US dollar strengthens. And right now, the dollar index has climbed to its highest level in over a year. That is a traditional headwind for risk assets like Bitcoin. The price initially reacted by dropping from a high of $66,300 to an intraday low near $62,000. The market feared a deeper pullback. Many analysts are warning that if this support doesn't hold, we could be looking at a test of $60,000 or even the $50,000 range in a worst-case scenario. But that is only half the story. That is the fear narrative. And it is designed to make you panic. But that's not even the biggest story. The biggest story is what is happening beneath the surface. Because while the mainstream narrative is screaming sell, some of the most influential financial institutions on the planet are doing the exact opposite. John D'Agostino, the head of institutional strategy at Coinbase, recently went on CNBC and dropped a bombshell that very few people are talking about. He said that family offices and sovereign wealth funds, massive entities like Abu Dhabi's $330 billion Mubadala investment company, are gobbling up Bitcoin hand over fist. These are not day traders. These are not retail investors chasing a quick profit. These are entities with time horizons measured in decades. They loved Bitcoin at $125,000. They liked it at $100,000, and they love it even more at $65,000. They are using this drawdown as a buying opportunity. And why? Because they understand the long-term thesis. They understand the fixed supply. They understand that with ETFs, governments, and corporate treasuries warehousing more of the remaining float each year, the price is biased to the upside over the long term. And speaking of corporate treasuries, Strategy, formerly known as MicroStrategy, just added another 1,587 Bitcoin to its already massive holdings. They are not slowing down. They bought the dip. Very few investors are paying attention to this clash between Federal Reserve policy and sovereign wealth accumulation. But they should be. This is a war between the short-term macro headwinds and the massive institutional bid that is forming a floor under the market. Stay with me, because this changes everything. We have just been handed a crucial data point that signals the market is currently in a state of extreme uncertainty. The price is stuck. It's caught between the hawkish Fed and the institutional buyers. But this range is not going to last. We are building up tremendous pressure, and what happens next could surprise everyone. On top of the monetary policy and institutional buying, we are also seeing a shift in the geopolitical landscape. The United States and Iran recently implemented an interim agreement that reopened the Strait of Hormuz, which caused oil prices to fall. This easing of tensions is usually a positive for risk assets. It suggests a more stable environment, which could lift some of the weight that has been holding Bitcoin down. The entire global crypto market cap actually went up slightly, gaining over 1% to reach $2.19 trillion. The pieces of the puzzle are starting to click into place, but just as one door opens, another seems to close. We have to look at the ETF flows. While the big sovereign funds are buying, other institutional players have been pulling money out. Spot Bitcoin ETFs shed roughly $2.1 billion in June, putting the month on track to potentially surpass the outflows from May. BlackRock's IBIT, the largest fund, has seen 5 straight weeks of withdrawals. On the surface, this looks bearish. It looks like institutional capital is fleeing. But think about it. This selling pressure is happening at the same time as sovereign wealth funds are buying the dip. This is what a market top to bottom looks like. It is a transfer of wealth from weak hands to strong hands. The outflows, as some analysts suggest, might be mechanical, from leveraged funds, arbitraging futures, or rotating into other sectors like AI. It is a battle between different types of money. One is looking for short-term liquidity. The other is looking for a long-term store of value. And this battle is reaching a breaking point. The options market is flashing a massive warning signal. There is a Bitcoin options expiry coming up on June 26th, with roughly $10.5 billion in open interest. The max pain level, or the price where the most options expire worthless, sits near $74,000. That is far above the current price. This means that a significant amount of bullish positions are under severe pressure. To avoid massive losses, market makers may be forced to hedge their positions, potentially pushing the price toward areas where there is high liquidity, either up to $65,000 or $67,000, or down towards $62,000. We are at a critical inflection point. The pressure is building. The time to prepare is now, not after the move happens. The setup is too explosive to ignore. There are simply too many conflicting signals, too many massive players on opposing sides, and too much leverage in the system for this to remain quiet for much longer. The 24-hour window we are in right now could very well be the last chance to position yourself before a significant move. So, what does this all mean for you? It means you need to stay vigilant. You need to watch the levels. A sustained move above 65,000 could quickly turn into a rally towards 67,000 and beyond, potentially flipping the narrative back to bullish. It would confirm that the institutional bids have overwhelmed the macro headwinds. Conversely, a break below 62,000 could open the door to a quick drop to the $60,000 level, triggering a wave of liquidations and a panic sell-off. The key takeaway here is to not let the calm price action fool you. The storm is building. The signs are all there. The hawkish Fed, the massive institutional accumulation, the geopolitical shifts, the options expiry, they are all converging right now. This is a moment of maximum uncertainty, which often precedes a moment of maximum opportunity. The price action over the next 24 hours could very well set the tone for the rest of the summer. For more videos like this, make sure you subscribe to Sawyer Silver Vault and turn on notifications so you never miss the next major Bitcoin update.